The trade of the week was a fun one. Precursor was Smith & Wesson came off of earnings, and nobody saw that coming. Well, apparently some people did, but you had to, I wish I was on the ball to buy that gap, because there was a reason to buy that gap. They literally blew the cover off of their earnings.
All kind of starts up here in the upper left-hand corner. We have the trading room, the TI trading room, hosted by Mr. Barry Anderson. Barry's going to open the doors about 30 minutes before every open. And the great thing about the trading room, of course, other than Barry, is the price, which is $0.00. Got traders in there from all skill levels, beginner, intermediate, and advanced. So if you haven't been taking advantage of the free trading room, by all means, do yourself a favor, get in there and do so. Of course, on Mondays in the 5 p.m. Eastern slot, you get myself and Steve. Tuesday rolls around. Steve used to have the Tuesday slot, but I believe he has pivoted to the Wednesday slot. So probably got to update these slides here.
Correct.
Not distant future, but yes, Steve is now doing Trade of the Week on Wednesdays. Okay, Wednesdays, 5 p.m. Eastern webinars. We bring in our CEO and founder, Mr. Dan MIRKIN, along with Brad Williams, typically giving you guys a peek at new tech, new features that might be coming down the developmental pipeline there. And he's going to round out the 5 p.m. Eastern webinars with the Trading Studio, and I'm going to ride shotgun with him. And of course, this is what Steve was getting at on the daily support session. He has pivoted to Wednesdays, not the Trade of the Week. So, in other words, Monday through Friday, 12 p.m. to 1 p.m. Eastern, that's our daily live support session. We have a different trader/trainer person in there each and every day of the week to give you a little bit different of a flavor, different take on each and every day. So take advantage. It's a great place to get anything TI related addressed in a live environment with a trainer and a visual. Moving right along, this is how you get there. trade-ideas.com/live. That is a static address. So once you get there, you can just easily bookmark it for future navigation. It's going to be the same static address each and every time, but once again, starting from 12 p.m. to 1 p.m. Eastern every Monday through Friday. In addition to those resources, these are some really great resources, especially if you're new to the product. This is a 4-part video series, TI University, 101 through 401. Especially if you're brand new, I would highly recommend these two right off the bat. When you feel that you've got that under your belt, you can cruise on to the 301 and 401, which gets into a little bit more of the advanced functionality, back testing, optimization, all that good stuff. You can access TI University through our YouTube channel. So if you just cruise on over to YouTube, search for the Trade Ideas channel and search for TI University, you can get these videos to come right up, watch them at your leisure. But you can certainly get over that learning curve a lot quicker than later by going through the paces with TI University. And here we are at today's agenda. So Steve, kind of the exact opposite of what we saw last week, right? Last week we saw the Qs taking off and the SPY lagging, and today we see the SPY taking off and the Qs
Jerome
lagging.
didn't like that. Jerome did not like last week.
Yeah, Jerome. What are we going to do with Jerome? He's kind of getting tiresome over there, but I guess we can't necessarily vote him out. So,
yep.
If you're ready to take the helm here for a second, and we'll take a look at the larger tracking ETFs, get your take on it.
Am I grabbing it? Let's
see.
I'll grab it. I got it.
You should have it by now. There you go.
Yep. All right, welcome to my desktop, guys. I'm starting off here on the S&P as it looked Friday. This is what it looked like on Friday. And guess what? They didn't get me this time. I tried to participate the last few times in some of these downturns, only to just wind up taking a profit and watching it come back to flat and getting out for a scratch. Went home this weekend thinking, oh yeah, the trading gods got me. I mean, look at that. Giant volume increase. This definitively low closing candle on lows under the key moving average that we've been talking ad nauseum about. This is the moving average that spikes and holds, and the buyers jump in and close at midday. So I thought going into the weekend, I thought, well, the one time I don't have anything, going on the short side, they're going to get me. Boom. And there we are to today. Don't fool with Jerome. They don't like it when the market starts to pull back. They've got enough on their plate. So today was the rotation into the SPY for sure. Let's see, the SPY was up 1.4. Let's take a quick gander at the Qs, up 0.5. And the little guys, the Russell 2000, oh, two. They actually had a good day too. So, you know, NASDAQ was lagging a little bit, even though it's that's a beautiful looking chart, really. That's a sweetheart of a chart. Those are the kind of trade of the weeks that we would look at all day long when the market was roaring higher in the summer and the fall of last year. Not so much easier to come by to get follow through these days, but that's a sweet looking setup there. So the NASDAQ's probably ready to take that baton. The baton is being passed around so quickly now. The rotations are happening faster than the blink of an eye. I mean, anybody over 45 or 50 probably remembers the Ed Sullivan show, the guy that would come on and have those tall sticks and he'd start spinning plates at the top of those sticks. He'd have about 6 or 7 of those things going. And when one plate started to wobble, he'd run over there and grab that one and spin that one. That's what this market literally reminds me of right now. So I'm kind of laughing and at the same time glad that I didn't get caught up in this, because I'll tell you, you know, old school, let me just get that lined up. There you go. Old school, that was not a good close on Friday. Again, giant volume, red candle, closing on lows definitively under the rising 50 SMA that's been holding us up. But boom, the powers that be, the forces you just can't fight are there. I guess the market's just, you know, for whatever reason, maybe they're not concerned about the inflation. Maybe they don't believe the inflation is as bad as it is, and I believe it is. It doesn't matter when you've got a market that you can't kill. So no short positions on my blotter. I'm glad I didn't have any coming in through the weekend. Same old, same old. It's just very hard to get any follow through in either direction. But when the coast is clear and the dust settles, the S&P 500 still continues to grind higher. And again, there's really not much else to be said. I don't think the Russell, you know, had a bad Friday, bad Thursday, gave a lot back, bounced right back into play today. But being only up 0.5% here today, the NASDAQ QQQs in this beautiful consolidation with a couple of spiking bottom tails there tells me, hey, tech could be in for another ATH tomorrow up here. It's not going to take much really to get above 346.30, it looks like. So good run today, good recovery. Don't fight the Fed. Oh, the trade of the week was a fun one. Precursor was Smith & Wesson came off of earnings, and nobody saw that coming. Well, apparently some people did, but you had to, I wish I was on the ball to buy that gap, because there was a reason to buy that gap. They literally blew the cover off of their earnings, just blew them away. Very nice 2-day move in Smith & Wesson. And our trade of the week is a similar play, but it's on the ammo side. And if anybody knows what's going on out there, it's shortages in a lot of supply chains. A lot of things right now having shortages, and ammo is certainly one of them. If we've got more people buying guns, they're going to need ammo for those guns. And it's kind of a low floater at 59 million. Not really excited about the way it blasted through and triggered our live trade and then reversed right back into the range here. But I think the big takeaway is 775, I think, is going to hold. I hope it does. There's really no harm, no foul in what happened today. I mean, it went higher, it went lower, but for the most part, it closed off lows. And more importantly, our risk management line, that 10 SMA, which is what we're going to use as our risk management, is still down there. So we've got a lot of wiggle room here to continue to let this thing breathe. I still think this thing's probably going to have a good week, but we'll see. It's really hard these days to try and get any follow through. So we'll see. Powell's earnings coming up to the 29th. Yes, we got enough time, I think, to at least get some sort of a pre-earnings move coming off of the Smith & Wesson there, David. But I hear you. I figured that June 29th was probably close enough. That's going to work into next week. It looks like late next week. 24th says E-Trade. You want to look that up, Jamie? And maybe let's try and confirm. We want to make sure we've got the correct earnings date on that. We've got June 29th here in our trade. I'll tell you what, Jamie, I'll look that up because I'm about ready to hand it back to you. But yeah, so that's the trade of the week working. Another one of the also rans that I said keep an eye on today. Looks like it tried to make some movement over there in Fubo, whatever. Could be some nice follow through tomorrow, but that's a nice little extended flag. Fubo's breaking out of But yeah, we are in a big supply shortage right now for so many reasons. Whether it's shipping or whether it's not getting people to come back to work, who knows. But let me look that up, David. Thank you for pointing that out, and I'll come back and report and see what I find out there on the internet. But it looks like we are reporting the 29th of June for earnings in POW, but never a bad idea to go and confirm that out there in the search engines. All
Let's
right, Jamie, that's
see. I
all I
was
got.
just trying to confirm that. What are we showing? 29th?
Yeah.
I've got some tip rank showing the 28th. I don't know.
E-Trade showing the 24.
We'll just have to dig in and see. What...
We'll dig in. You're gonna require some research and digging.
Yes, exactly.
All right, that's all I got.
Thank you very much, Steve. Yes, Jerome, do not mess with Jerome because unlimited money printing is a powerful drug. Okay, and somebody else is chiming in saying Benzinga is saying the 21st, but that would be today. So not really sure about that. I do believe you should have eyes back on my screen. Can you confirm for me, Steve?
Yes.
Okay, let me just do this real quick, make sure. Okay, we should be good to go. All right, so yeah, we'll have to dig around for that earnings date. So let us cruise on. So
Google's got the 26th. Sorry, I'm just chiming in there.
just number dates are all over the place, it seems.
Mm-hmm.
Yeah, so my compare count readings today really kind of worthless for lack of
Can
a
I
better.
interrupt? Can I just
Yes,
interrupt? I'm so sorry, but we got to put this to bed.
go ahead.
So the 21st is correct. They announced today. So this is why our earnings might be off sometimes. Tomorrow we might come in, it might be different, but it doesn't look like it because it says Scottsdale, Arizona, June 21st. Ammo Inc. is going to report earnings conference call on Tuesday, June 29th, 5 p.m. Eastern. So after market, June 29th, I'm going to go with that.
Sounds good to me. And that would be on next Tuesday. Okay, all right. Hopefully mystery solved there. All right, ladies and gents. So, it is the summertime. It kind of feels summery now. Of course, based on the past 2 summers, things can get heated very quickly, but it kind of feels summery now as we put in that big green bar today, and we're just not too far away from all-time highs. Looking at the daily here on the SPY. Compare counts didn't do me a whole lot of good today because these are the readings that I saw after the first 15 minutes. So I was thinking to myself, well, we might give it back. But as we can see from the intraday here on the SPY, it didn't want anything to do with a pullback whatsoever. A couple of pullbacks throughout the day, but finishing pretty close to highs there. So kind of rare that these serve no purpose whatsoever, but 55% bias to the downside. Not a lot of my shorts were going down today. And of course, the market never peeled back. And sometimes this happens. Sometimes our favorite metrics or studies, they just don't have any credence. But that's kind of rare for the compare counts because typically when we see a bias of this nature, we're going to see that move either in the beginning of the market or sometimes it saves it for the last. But the market was having none of it today. A little bit of a downturn in the first 5 minutes, and then it was just up, up and away. So compare counts didn't do us a whole lot of good today, but we'll have to see for the rest of the sessions for the week if that is going to remain, or do we kind of go back to quote unquote normal type stuff. So not a whole lot of help from the compare counts today. Now, Holly, I was a little nervous today because look at the strategy panel that we had today. A whole lot of strategies made the cut from last night's, from Friday night's analysis. 19 different strategies. I think 1, 2, 3, 4, 5. Yep, 19. I counted them up earlier, but as we can see, not even half fired any symbols, and the ones that did fire seem to be one-offs, 2 from tailwind, bullish pullback, and quarterback. Having said that, not the best performance from the AI. Keep in mind, I've got mine set, as you see in my blotter right here, for risking $100 a trade. So if we cycle through the risk modes here, conservative down a smidge, moderate down a larger smidge, And then of course, if we just let everything run, down about 237 bucks. Of course, we did have a little bit of a gap, but not a whole lot to speak of. I mean, what did we close at Friday? Let's see here. What do we got here? 414.98, and we opened today at 416.79. So about a 2-point gap in the SPY. Nothing to sneeze at, but of course, the bigger the gap, a lot of the times that takes the steam out of our plays, and that seems to have happened to most of the Holly plays today. So here we are looking at the blotter with $100 risked per trade, and we can see, not the best day. Now, if we focus over here on the 100 share lots, sure, if we were doing 100 share lots, 1.0 up 63 bucks, Holly 2.0 up 13, and Neo down $1.82. But of course, that's not what we're doing right here. We're risking $100 per trade, and we just went through the numbers. So just kind of a small losing day, let's say, for the AI. And typically, the metrics that we like to kind of focus on for some trade arounds or some spread between conservative and moderate, any potential add-ons, those are few and far between today as well. Matter of fact, when we're talking about spread between moderate and conservative, for the new people out there, we're just focusing on these two columns, right? Seeing how the AI exited in conservative mode, and by the end of the day, could you have made more if you held and took a little bit more risk? And typically we would see a larger value in the moderate column, but we're just not seeing that, not in the MARA short trade, not in the AYTU. We got a little bit of spread in Sony. So just for posterity here, we will take a look at the Sony trade. All right, not a bad buy signal coming in pretty soon after the open here. 96.51, a little bit of a lift up to here, and then a pullback back to break even. And then even if you held this one all day, of course, the shaded area here is Holly's time spent in the trade. You can see she pulled the plug as soon as it got back to the break even spot. That's why we're seeing a 0 in conservative. And even if you held this thing all day in 124 shares, you only made 53.88. Okay, so 96.51. What do we top out at right up here? Not even 50 cents total holding to the close. So once again, pretty significant gap on Sony. Once again, taking kind of the steam out of the upside potential there. But this is really the only one that shows any spread between conservative and moderate profit. Just was not present today. No big surprise there. Now, when we talk about trade arounds, we're typically talking about the stocks that were stopped out. All right. So notice these two stop outs, FSK, Jobs. I was a little surprised to see those late day trades come through. I think that was rare. CLDX and FSK, of course, FSK coming later in the day, getting the buy signal right here, and then promptly going down and getting stopped out. Now, focus on the aggressive profit. If there was a smaller value here, if this thing got back to flat, or maybe sometimes even in the green, that's a good indicator that it was a good trade around. But notice what, let me just enlarge this chart out a little bit so we can see it. All right, got a little lag here, bear with me. Notice what happened when we got down to the stop area. Did the stop area act as a pivot level? Did it act as a short-term support level? Nope, just closed below it. Spent the rest of the day pretty much below that stop area. Pretty much the same thing with Jobs, just coming earlier in the day. Take that one up, got to shrink this one back down. Come on, work with me here. There we go. Okay, so once again, looked pretty good going into this trade. Little range here, but as soon as it came down here and stopped us out, what happened? Same thing pretty much as the prior one that we looked at. Didn't want to have anything to do with it. Spent the rest of the day below that stop area. Typically, if they come down here and they tickle the stop, stay above it, well, then that typically is a good candidate for a trade around. Just having that stop area act as a potential pivot or support area, then being able to get a better price in the AI and hoping that it gets back to the entry signal and sometimes even beyond that. But once again, just none of those present today, just 2 stop outs, and both of them spent the remainder of the day below that stop area. So not a whole lot of conservative moderate spread, no trade arounds. And when we talk about add-ons, typically we're going to be focusing on a auxiliary pattern that could have played out. I'm just not seeing any of that today in most of these plays. Mara, now that was a beautiful entry, putting on the brakes. Man, it hit this one just perfectly. Beautiful little short entry up there. Only problem is we just didn't get a whole lot of movement out of Mara. As we can see, the seesaw went back and forth, did finish at lows, so it was a decent trade. Matter of fact, it was the best trade of the day going into the close for the AI, and that also speaks volumes. Just a lot of noise up there, even in the statistical viability world. Now, as far as the rest, if we just kind of scroll through some of the ones that did work well, you know, if AYTU could have bellied up and broke these ranges and stayed above them, well, then it could have been a potential, excuse me, on Sony, I mean to look at AYTU. AYTU signal coming right here. All right. Now, for a while there, I had my eyes on this level here, but based on the rest of the market action, didn't feel real comfortable adding to that position. All right. This was one of the winners that was looking like it was going to continue for a while. But when we look back over here, you know, I was thinking for a moment, well, here we are. We might get a little bit of a kick and get on up to the top of that bar, going back to the 8th, but it just couldn't have it. You know, wicked out up here. If you didn't take some off quickly up at that $6 level, then it was just boom, 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 below that level for the rest of the session. So we just didn't get a whole lot of follow through in a lot of the Holly trades. Not the best day, not the worst day, or as far as a losing day goes, you know, typical for Mondays here lately, it seems. So just kind of a lackluster performance from Holly. But with the market setting up, as Steve illustrated earlier, we still got 4 more days left in the week, so we will see what happens. Okay, John, are we seeing my screen now? Are we seeing the AYTU, or did I freeze up, Steve?
I see AYTU.
Okay, all right, just making sure I wasn't frozen. All right, so moving right along here, I do want to talk about a few of the prior Holly plays, okay? That would be AVXL and SWBI, the one that Steve was talking about earlier, because when you see these guys come into play, it's probably worth putting them on your radar, setting a price alert to say the least. AVXL was a Holly buy back from the 14th, okay? And notice the action, you know, this is what we would call kind of normal action, looking at the daily on AVXL. On the day that, on the 14th, this was a big day compared to what we see here, all right? Big green candle. Of course, then we had inside day, and we pop back above. But when we see these, the big green candles, they're either going to continue or pull back a little bit. All right. But what we want to focus on is just setting that price alert above or right at the high of that big day, because if they continue, just like AVXL did, even though it took 1, 2 inside days before it got a little moxie back in it for the past 3 days, these can turn out to be decent swing trades, right? We all know that Holly is geared towards the intraday, but that doesn't necessarily mean that every once in a while one looks pretty good on the longer term time frame. And if we mark it up, set that price alert, we can get a piece of that. So AVXL is a great example of one when you do see big volume and a big move come in one day that was triggered by the AI. It makes sense to kind of keep your eyes peeled for it, or at the very least set a price alert. That way when it comes back up above this level with some steam, it has a pretty good chance of continuation there. So, you know, setting a price alert at the top of that green bar, or if you're a purist, you know, use the wick, all right? And this would have been a pretty decent price alert for these prior 2 days before we had the gap coming into today. Now, the other one was the stock that Steve was just talking about, which was a signal Friday of last week. Okay. This one, not really taking any time to consolidate, right? But the top of that green bar would have been a great price alert, right? Just marking it up right here. And even more beautiful about SWBI, we didn't have a big gap come in here and take all the steam out of it today. You have to ask yourself, well, I wonder why. Typically you would expect a big gap, but let's see. Let me just shrink this down to 15-minute candles. I'm tired of having to stretch and compress there. Okay, so on Friday we closed at 23.39. We opened at 23.50. So I stand corrected. A whopping 11-cent gap up, but then boom, 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 just off to the races. And as soon as we cracked the high of that prior day, which was on the gap, we were already there. So just a beautiful, powerful, strong move from Smith and Wesson. All right. So just keep that in mind. When we see the big green bars come into the Holly plays that look a lot different from the other ones, take the time, set that price alert. Definitely keep it on your radar because those are the ones that set up for some nice continuations sometimes. Sometimes they take a few days to consolidate, have a few inside bars, and sometimes they just keep on going like SWBI did. But both of those stocks were on my radar simply because they were previous AI picks, which perked my eyebrows because of the big green days and the big volume. Typically, when you have that, you're going to have more of the same. Is it going to take 1 day, 2 days, or 3 days? You never know, but it's always good to keep an eye on them. All right, so just wanted to throw that in for the conclusion of the Holly recap. And now we're just going to pivot on over to the price alerts, which are delivered fresh every Monday. And if you go over to the Strength Alert channel, if you haven't done so already, Strength Alert channel over here, this is where you can procure this window here. All right, the Strength Alerts top list window, which is updated automatically by Michael Noss every day. So as soon as Monday rolls around, you can just consult your TI Strength window and go, hey, let me check these plays out. And of course, sometimes on Monday, some are going to rip, some aren't. But overall, it's about, you guessed it, setting those price alerts. So the simple methodology that I've been keeping tabs on the price alerts with is as follows. I've just been going back to the weekly chart and taking a gander at everything and setting some price alerts. So that's what we're going to do today. And I would urge each and every one of you to get into the habit as well, because when we scroll through these and we look at the weekly, you're going to see pretty much the same theme. You're going to see an interesting level that if it is breached anytime soon, could turn out to be an interesting play. So when we're talking about 4 here, yeah, had a nice little run from the open, topped out up here, kind of capitulated back down, but not a bad intraday move. But when we look at the weekly, eyes are automatically drawn to this week and playing the breakout game, which those of you who know me know that I love playing nice clean breakouts on any time frame. So why not extend that technique to the string plays as well? So I'm going to set some price alerts here, and before we're done here, I'll go ahead and dish them out to you guys as well, so you don't necessarily have to do them manually here. So what we're going to do here is we're going to take the high of this week, which is 104.11, and we're just going to set a price alert, a penny above. We'll just say 104.12, and then we will name it appropriately. All right, so that's 4. HNZP. No, that is not Heinz Ketchup. It's Horizon Pharmaceutical. And let's see here. We got a high there, 97.20, 97.36. Am I seeing that right? Yeah, 97.20, 97.36 there. So we'll say 97.37. All right, let me take a look at my price alerts here, make sure these are getting logged properly. 1 moment, please. Okay, there we go. Just want to have eyes on them. All right, BRY, Berry Corporation. All right, this guy looking really tight up here. We got a high from the prior week up there at 710, so we're just going to go 711 on that one. All right, next on the list, Equifax, your favorite credit reporting agency. Looks like we got a high there from 242.13, so we'll go 242.14. And lastly, but not leastly, in INVA. All right, we got Wiki on that one. Let's see, that's not too far away though. This is a lower price stock, so we got a high of 13.97, so we'll just go 13.98. Boom, right on the money. TI strength. And boom. So we got 5 price alerts there. Aptly titled. So let me go ahead and share these out real quick here. All right, so there's 5 price alerts for you guys to load up. That way, if you're doing something, lose track of one of these guys, boom, that price alert is going to come up, flash yellow at you, and then you can decide, well, looks good, is the volume there, so forth and so on. So just a nice, easy way to do it. Of course, having said that, that doesn't mean that there might not be some good pullback opportunities in these stocks as well. So a little homework assignment. Of course, we might want to look at the daily for these. But you know, you might want to peruse some of the levels and some of these strength stocks on the daily in case the market does get a little bit soft. Of course, according to what we were seeing with Steve earlier, looks like the market is setting up for a little bit of bullish activity there. But this is just one way to do it. You know, don't be scared to get in there and look for pullback alerts as well. Of course, if we do get a little bit of red, then it'd be natural to peruse these stocks and go, huh, this looks like it might be a good level of support. But I like the way that those upside alerts are looking. So hopefully we'll see what happens. Maybe we can extract a little fiat money out of some of those alerts in the rest of the week there. All right, and of course, always like to point out the good opening range breaks that occurred on the intraday time frames as well. Of course, not a whole lot of them today that were of high quality, but there were 3 I'm going to point out here on the long term and one to take a look at on the short side. All right, we got a question coming in there. Can I get the TI scanner link rather than the price alerts? Sure, I'll just go ahead and dump the strength top list window in there for you guys as well. Why not? Okay, so now the TI strength top list is in there as well. All right, so as I said earlier, the high quality orbs, which are the tight, easily identifiable consolidations, they've been a little bit harder to find too. Typically maybe 1 out of every 10 I would scroll through using these 2 alert windows right here. I might see one that fits the bill, but it feels like I'm having to scroll through about 20 here lately or even more before I find one that is setting up properly. But there's always a little bit to be had here. Now, let's go ahead and talk about SWBI because, as Steve was illustrating earlier and what I was talking about earlier following the prior Holly trade, of course, this one came about pretty early, so we got to shrink the time frame down just a hair. Okay, but out of the gates, we can see SWBI, boom. Then we get this little flagging action up here at the top for about well, we put in this high right here about 20 minutes in, and then 1, 2, 3, 4 for about 20 minutes. We get this nice tight, that's consolidation. It's just not a very long one, but it's clearly identifiable, especially with what SWBI has been up to. After what we saw it do Friday, and then we saw the buyer immediately take control with just a smidge of a gap up, and then we see this little flag area up here, a little consolidation, and then boom, right here. All right, right here is where it popped a new high for the day, and that's why we would see it come through here. All right, so that arrow is the exact 5-minute candle where we see that high get breached. And man, you could have bought anywhere in that candle, had a very decent price and a very low risk, because when we're assigning risk values, I'm just going to pull this down a little bit, not including the entry candle, which obviously is this guy right here. We look back for the prior 15-minute low, 5, 10, 15. That's why I had my line snuggled up to that area right there. So you just can't get any tighter than what you're seeing right here. I mean, you can, but you just don't see it typically. Very low risk. And then at the peak and even very close to the close, look how big our reward area is. This entire area here is reward with a little teeny risk area right here. So we're risking 1R. Probably could have packed that in there 7, 8 times, right? That is a good risk and good return. Perfect setup on SWBI, plus what it had been telling us last week, so forth and so on. Just a really great mover. People are buying the guns, and hopefully we'll see that carry over into the ammo as well. All right, so very good from SWBI today. CTXR, these are all going to look like pipsqueaks compared to what we just saw in the SWBI, but it's the pattern that counts. Give me just 1 second here, ladies and gents. Got to get a little drink of water. Texas weather is about to do me in. Okay, so, I said these are all going to look kind of like pipsqueaks, but I got to say the CTXR, not too shabby. Did I mark this one up on a 15? And we'll go back. Yeah, so here it is on the 15, right? But it came early, so we are going to have to go back to the 5 here. Closer they occur. And by the way, I typically use 5-minute candles anyway for the first hour, so we can identify these patterns. But here we have it right here. I thought I'd mark this one up, but I guess I forgot to save my layout. So we had a nice tight range in this CTXR for 1, 2, 3, 4, 5. Perfect 30-minute opening range break as this low was put in, and then we came back up here and cracked that level. Very identifiable, right? So getting that signal right about 384 with room all the way up to 435. Once again, this is our risk area here. Looking at the, actually this is not the risk area. If I want to properly identify the risk area, not including the entry bar, 1, 2, 3. So the risk area here just happens to coincide perfectly with the low of the day. They don't always do that, but they did in this case. So once again, entry bar right here, coinciding with the blue arrow, 5, 10, 15 is perfectly at the low. So this is indeed our risk area. This is our reward area. How many times could we fit this area into that area? Don't know exactly, but it's definitely 4, 5 times. And that is the type of risk reward that we want to find. Okay, we got CTXR, SWBI. Oh, and this one was really good too. Forgot about little GBR. Okay, so more of the same. Such a tight consolidation, and this one didn't go until about, let me see if I got on the right. I want to say I'm on the wrong bar there. Yeah, so this one is a little, yeah, that was the proper high back there. So we obviously cracked it right here, but the volume might not have been enough. So this one coming a little bit late. But having said that, very decent risk area. And of course, we can see how this little guy did for the remainder of the day. All right, not too shabby. Getting that price coming through that high, about 556. Wow, almost a doubler here on GBR. So once again, very low risk area. Entry bar here, 5, 10, 15. We got to tighten that up. But it never even made a run, never even made an excursion back down into that level, thinking that we were going to get stopped out. So as far as risk to reward ratio here, I mean, that's got to be the champ of the day, right next to SWBI. So these plays are out there every day. You just have to be diligent, look at all the plays coming through, try to catch them when the timing is right. This one gave us a lot of time. I mean, anywhere in this area right here would have been some really decent risk. And GBR, let's check out the volume here. Yeah, finishing at a meager 23.61 on the relative time frame there. And on the smaller time frames, this guy was rocking pretty much all day, usually only kicking out about 1.1 million shares and kicked out 25.5 million today. So I'd say something is definitely afoot there. And look at that little, look at that level that was breached also on the daily. And that looks like a good stopping point. So if this one looks a little bit weak tomorrow, you never can tell. Might do a flip, might be good for some on the downside tomorrow, but only if the setup is clean. All right, Steve, any questions that I need to catch up on here?
Just the perils of using pinned windows for somebody who likes to toggle back and forth between channels but keep their charts up. I just explained how that's, you can do it with the pinned window feature, but you want to be careful you're not stacking them on top of each other and duplicating a dozen of them underneath. That causes problems.
Right, let me give a quick example of that because it can be your bane if you don't know what's going on. So let's do this. Let's say, of course, none of my windows are pinned, all right? But let's say I pin these windows for whatever reason. And then I made some changes to some of my other windows. Then I came over here and I hit save layout. Just like I normally do, make sure I save all my changes and all that good stuff. Well, every time I loaded my layout from that point on, it would stack a duplicate window under there. So if I loaded my layout again, oh no. Oh, okay. I thought I did something wrong there. I'm like, what did I do? Don't know
You
why it's
sounded
taking.
like that TikTok song where they go, oh no,
Oh yeah.
oh no.
Okay, so see what happened? It looked like I just had my two windows there, but in essence, there's a duplicate under there. So every time I saved my layout from that point on, it would stack another one. And if you're not moving your windows around, you wouldn't know it. And pretty soon you'd be like, why is my system so, bogged down? And come to find out you'd have 5, 10, 15 stacked windows under there. Okay, so that's why it's very important. If you do have a pinned window, make sure you're not resaving that thing over and over again because it'll just keep stacking them up. One day your system will bog down or you'll miss a trade and it'll be pretty irritating and you'll come into troubleshoot and we'll be like, hey, it's because you got all these windows pinned. Happens
Yeah,
all the
but
time.
very soon we have a workaround for everybody. The new version 5.5 is going to have container windows just to solve one of these issues.
Yep, and we keep thinking that we're going to release 5.5. Who knows? Fingers crossed. Maybe by the end of this week, maybe by the end of next week. But yeah, that's going to be great when we finally do get to kick that out to you guys because I've got some really cool windows, and I'm sure Steve and Andy and everybody else does too. Only problem is we can't share them with you guys yet until you're on the new version. Okay. So, Bajinder, what I was talking about earlier with SWBI and GBR, they both came through this window here, which is just looking at stocks hitting a new high with some accelerated relative volume of 3 or higher. Okay, so both of the stocks came through this window today. But when we were talking about SWBI, it was a lot more on the front of my brain for today's trading session because of the big day that it had on Friday. It was an AI play, okay? And typically when you have these big green bars that are looking a lot different in these breakaway bars, and the AI will produce them, make a good day trade, but then a lot of the times they keep on going. So SWBI was a great example of that. However, it did come through this window as it was breaking this high right here, on an intraday range break, little bull flag pattern right there. It was coming through this window. So I tell you what, if you like these windows, I'll be happy to drop them in here real quick. And then we did have one example to the downside. I kind of forgot about that one. We'll just put high volume, high a day for that one. Do a little time check here. Yeah, we got enough time to look at this one. This was the only short play as far as the opening range break that caught my eye today. And I think you guys can see, just how organized this was. Now, even back here, right? This is the first occurrence of it. So I tell you what, when I reset my layout there, it kind of threw me off. So hold on one second, because it did identify both of these crucial points here. Okay, so this first break from this little level right here was right there at 920. So we can see, boom, that was the first occurrence. So taking a short right here, all we had to do is be a little patient, because going back 15 minutes, stop loss would have been way up here, right? Reward area. Boy, I'm lagging today for some reason. Big reward area, decent risk area. So we got the first occurrence here, took its sweet time. Most of the day it was just hemming and hawing right around that entry level. Used to see this in a lot of Holly plays, just hasn't been present as of late, but it does remind me of that, right? If I was Holly, here's my signal. Oh, we've got consolidation. So when it breaks again, might be a great time to add to the position. And then we got that alert right here at the 11:35 mark. Boom, when I click on that alert again, we got it identified again right here. So a great initial signal, nice consolidation for the remainder of the day, and a opportunity to add to the position here. So all the way from the original price of, say, 27.72, a nice time to leverage the position, and capitulating all the way down, and we'll just call it 26. So almost not quite 2 points, $1.60 something total potentiality in the HCM, with kind of a stress-free trade and a nice opportunity to add to it as the pattern repeated itself 2 different times there, and clearly identifiable. I mean, this is textbook. This is what you want to see in these types of plays. And I'll go ahead and drop that window into the chat as well. And then we're going to be coming to the close of the session. And we'll just call this one new low, high real volume, otherwise known as new T high and new T low. 2 great little windows, keeping tabs on stocks hitting highs and lows with that accelerated relative volume. So then we all just have to make sure that the timing is appropriate. Obviously, if we weren't paying attention and we didn't catch it right here or right here, and then later on we see it hitting a high down here, well, the timing is not there anymore. We want to get it right at the break. The further away from the break we get it, the less attractive that entry becomes. All right, ladies and gentlemen, that brings us to the top of the hour almost, and I'm just about out of content here. So want to thank you guys for popping in as always, and since Scott is not with us today, I will walk us out here, poorly, I might add. So if you haven't done so already, we've got an ebook that is written by our Chief Information Officer, Mr. Dave Mabe, who does a lot of the magic work behind the coding of TI and the AI. Dave Mabe, So if you haven't downloaded his ebook, you might want to just cruise over here, tradeideas.com/strategy, and give it a read. It's free. We've also got a podcast, depending on whatever podcast app you like to use. It's all the same. Just find the Trade Ideas podcast. We've always got some good stuff coming from Sean and a few of the other guys. Dan and I used to do the podcast, but there are people out there within the firm that have a little bit more skill in the podcast arena. Of course, we'll do some guest ones every once in a while, but always interesting from the boys. So if you haven't done so, start listening to the podcast. Moving right along here, we do have a discount code in case you're thinking of taking a new subscription or upgrading. Sunshine will give you 15% off your first month or a full year of premium. And you can find me on Twitter. I am QuantBot. Steve is TISteveG. We've also got a Facebook address, and our phone number here is typically reserved for billing issues. You can also email us at info@tradeideas.com. All right, guys, thanks for popping in. Got 4 more days left in the trading week, so I hope everybody is nice and green by the time that Friday close rolls around. Steve, as always, thank you, and we'll see everybody tomorrow. Happy trading. Bye-bye.